The latest inflation report is spelling big trouble for the housing market as the new multi-decade record high numbers will push the Federal Reserve to get even more aggressive with interest rates. In today's video, we'll look at the latest numbers and how it will affect the Fed's monetary policy going forward and ultimately what that means for the housing market. Let's get into it. The Bureau of Labor Statistics released their Consumer Price Index report this week, and it was pretty bad. The June reading for the index was 9.1% higher than the same time a year prior, surpassing market expectations for a lower number. The 9.1% year-over-year growth was also an acceleration over the 8.6% in May, and it represented the highest rate of consumer inflation since November 1981. The usual suspects behind the bulk of the price increases were food, shelter, and gasoline. CPI Food Index was up 10.4% over the year, a new multi-decade record high. CPI Shelter Index was up 5.6% over the same time the previous year, a new multi-decade record high. And the Gasoline Index was up 60% over the last year, which was definitely a new multi-decade record high. I'm starting to sound like a broken record here. All of the major price indices are at multi-decade record highs with little sign at all that we've reached a peak and will start seeing inflation trend lower. Making matters worse, the outlook over the next few months points towards even more increases ahead as high inflation and producer prices have yet to be fully realized in consumer prices. The latest data on the Producer Price Index this week came in near the recent peak back in March at 11.3% year over year in June compared to the 9.1% for consumer prices over the same time period. Looking at these two series going back further in time, they have tracked each other fairly closely, and it is just in the last year that they have diverged so noticeably. It may only be a matter of time before we see consumer prices catch up to producer prices in the months to come. So, consumer inflation is pretty bad right now, and producer prices suggest there's more pain on the way. But what does this have to do with the housing market? For my regular viewers on this channel, you know the story quite well. The Federal Reserve is currently engaged in what is shaping up to be an epic battle with inflation, and one of their main tools is to raise the Fed funds rate, which they have done with increasing intensity at each meeting this year. This in turn puts upward pressure on mortgage rates, which we've seen surge this year, and is making homes increasingly unaffordable and puts downward pressure on prices. If mortgage rates go too high, which would happen if the Feds keep getting more aggressive with their Fed funds rate, we could see the housing prices plummet in response, as few would be able to afford the average home on the market. But here's where this week's inflation report is so bad. The last time the Federal Reserve had to seriously fight inflation back in the 1980s, they had to raise their Fed funds rate 20% higher than the rate of consumer inflation to bring it down. So as we see inflation moving increasingly higher each month, that could mean the Fed is going to have to raise interest rates even higher still to really rein it in if they decide to get serious and invoke the Volcker Doctrine and strangle the economy to bring consumer inflation down. Here's what that might look like. With a current consumer inflation rate of 9.1%, the Federal Reserve would have to bring the Fed funds rate up to 10.9% to get it 20% higher than consumer inflation like they did back in 1980. They're currently at 1.5%, and I'm starting to think we could see a full 100 basis point increase at the Fed's next policy meeting wrapping up at the end of the month. And this is precisely because inflation is accelerating even higher as they're raising rates. Wall Street is also starting to price this in after the hot CPI report this week, and we're already seeing Fed officials open up this possibility in recent comments, a clear sign they are preparing markets for what they will do at their upcoming meeting, which wraps up May 27th. I'll be releasing a video covering what the Fed does for their upcoming meeting and how it will impact the housing market. So if you like these videos, make sure you're subscribed if you haven't already, and hit that notification bell down below so you know right away when that video comes out. And after the Fed's meeting, I'll also be releasing an update to my housing crash scenarios that incorporate all the latest data from the last month. Also, we should soon have the June data from Redfin on home prices, sales, and all the other statistics we're looking at here. And I'll release a video covering that latest data as well. Plenty of content coming out. Make sure you're subscribed. And if you could give this video a thumbs up, it would be greatly appreciated. It helps us in that YouTube algorithm and helps the channel grow. Thanks for stopping by. I'll see you in the next video.